and the market, Mansi?
Yes, it's not. Consider this as pink.
So markets in red comfortably, and to discuss markets, we have with us Rohit Srivastava, founder of Strike Money Analytics and India Charts. Rohit, welcome and advance happy Ganesh Chaturthi. Market is in now red mode completely ahead of the deadline, which is there tomorrow. Do you think other factors will play out once tariff deadline is gone? And more importantly, what are your charts saying? Are we going to march once again towards 25,000 soon?
So there is some level of risk that is showing up on the chart. A couple of things have happened over the last 1 week. And before I go on, a very happy Ganesh Chaturthi to you, to all your viewers. We've actually paused at that 61% retracement of the entire previous fall that we saw from the top that we made in June. Okay, and that level was close to around 25,160. So from 25,160, we seem to have resumed a downward trend. The question is, how far down can we really go? I'm not sure we can immediately bounce above 25,000 unless there is some kind of a positive news flow or outcome from this entire fiasco. And the trade setup today is that the gap that we left behind a week ago on the GST news is starting to get filled. Okay, so that was around a 150 point gap between 24,700 and 24,850. And once you start filling that gap, then the odds increase that you may go back and retest the 24,300 level from where we had bounced back. So that is what is happening. Unfortunately, it's a holiday today, so we will not be able to react immediately to the implications that may happen, because if there is no backtracking on the date of the implementation for the additional 25% tariffs, the chances are the market will retest 24,300, and the setup is already for that. One more level people can watch till the end of the day is the 20-day average, because we have touched that intraday and that level is around 24,743. So if we close below 24,743, it means there is danger to holding longs very, very short term overnight. And people should, stay out of long positions till, things clear up into the next few trading sessions, Thursday, Friday, and then take a call.
Important levels coming from Rohit Srivastava, 24,743. Further downside anticipated, and also if we touch base to those levels, we could also see levels of 24,300. And if you see these levels, less chances of a buying momentum, which will be seen in the market. But then, having said so, Rohit, if we talk about the sector-specific approaches at present, just two of the consumption spaces, the FMCG as well as the automobile sector, to some extent are trying to support the market. Now, we understand that with the festivities, there will be more demand and consumption sector will literally see good cheer. But for the short term, as you clearly see, all of the challenges in IT, metal, energy, now these are the sectors which are doing good positive rounds in the yesterday's session itself. How is your sector-specific strategy for the market at present?
No, you're right. These are interesting parts of the market, because even last year, we have seen outperformance of the FMCG segment when the markets were really falling. In fact, from Feb onwards, all the way into till the 24th of April, the FMCG index moved up when the market was actually getting hammered. So this is a place where people might look for a saving grace, especially since the government has already taken actions in the previous budget on the tax side for savers, and now on the GST side. So there have been a couple of triggers that create room for defensive outperformance. And that is also rubbing off on the auto sector. In fact, the auto sector also, if we go all the way back to 21, 22, when the markets were going through a tough phase, you had the Adani fiasco, you had the Russia war, the auto sector was outperforming during that phase. And we are starting to see a similar kind of pattern even now, where the auto index is actually outperforming the index. So both of these do provide some solace in what looks like an overall tough market, where very few things are performing and a lot of things are showing weakness. So you have to be very, very careful what you pick. These could be the outliers probably for this current phase.
All right, Rohit, thank you so much for joining at this hour with your views. And with this, it's time to focus on stocks and news.